GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we keep you in the loop like your family group chat keeps you in the loop on Aunt Margaret. I'm your host, Jay Hamilton, and today we've got a special episode for you guys. Now, last week, Milk Road Pro members got an exclusive AMA, and it was so full of alpha that I convinced Kyle and Martin, the heads of Milk Road Pro, to release it for free to you as today's episode. This episode will give you an edge on making life-changing money from your crypto investments because now is the time. The opportunity is now, and I don't want you guys to miss out on it. You're about to hear our brilliant heads of research at Milk Road Pro, Kyle and Martin, answer important questions from crypto investors like you. Questions like, what are their opinions on the future of ETH and Ethereum as a whole? Is it still a good investment? A lot of FUD on ETH. You're going to hear them talk about that. What are their thoughts on cross-chain projects like ZRO and LINK and AI projects like FET? Are those viable picks for this bull run? How did they time their market exit in 2021 for altcoins? This is so important. Planning for your market exit. When are you going to take profits? What is your stop loss? This is so important. And what decisions made their portfolio explode? They're going to talk about which is the bigger catalyst, rate cuts or the US election. And they're going to talk about, is DCA, dollar cost average, still a good strategy in this market? Now, trust me, the insights that they share here are pure gold. And we couldn't keep them. I had to make sure you guys got them. What's important to remember is you could have gotten this alpha a week ago. If you're serious about making money in this cycle, then you know how fast prices move and how big a difference a week makes. So after listening to today's episode and you get the inside scoop on what pro members get access to, I think you guys might want to go pro yourself, because then you can attend the next AMA live. You can ask your own questions. And you can ask questions every day in Discord, and you get so much more if you go pro. So check out the link in the show notes. Now, this episode is raw. It's unfiltered. It's a recording straight from the Milk Road Discord, and it's got tons of members, over 50 pro members chiming in live. So you might hear some side combos and Kyle and Martin battling it out with the chat. It's all part of the fun. And if you're like us and you want to gain more yield on your ETH in a safe and secure way, then you're going to want to check out our sponsor, Kelp. Let's hear from them. Get ready, because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your DGen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/Kelp Gain and spot airdrop Gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH or SETH or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AG ETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live, and you can go check it out for yourself today. Just head over to milkroad.com/Kelp Gain and get started.
All right, welcome back to another Milk Road Pro AMA. We are here to answer all the questions of our Milk Road Pro members. We've got, probably 20, 30 questions at least to answer, covering a bunch of different topics, everything from macroeconomic factors and market sentiment to different investment strategies, some stuff around portfolio, which assets should you hold, which ones shouldn't you. Some questions around exit strategies, which is quite interesting. I don't think we're quite at the part where we want to do that yet, but always good to be planning. And then just analysis around different sectors, different trends, and different projects in crypto. So a lot to discuss today. Before we get into the questions, Martin and I will just have a quick, maybe 5 minutes or so, explaining where we think we're at in the cycle and where the markets are at. It's been about a month since we've updated you on this. So yeah, it should be good. I think we'll get right into it here. So to get things started, I think the big thing that matters right now is global liquidity. And so we show this chart every week to our pro members. So you guys have seen this every Tuesday already. But global liquidity is on the rise. A lot of it is coming out of China at the moment, which is great. Doesn't matter where liquidity comes from. As long as there's liquidity, then assets tend to do well. So we're seeing it in China, and I think we'll soon see it in the US as well. But obviously a little bit of a lag there, but that's okay. So global liquidity still is the main driver of everything. So people are asking, like, is the banana zone going to come? Does the banana zone come if Kamala Harris wins the election instead of Trump? And I think, yes, it happens either way, because I think it's all driven by the business cycle and liquidity. And we're seeing other assets reacting to this. So this is a chart of gold versus global liquidity. Gold is just skyrocketing to all-time highs recently, and we think that this is a reflection of liquidity. Even the NASDAQ tech stocks doing the same thing. I think Martin's going to touch on this in a second, but they had a pullback recently, but they're already back up to their highs or close to. And crypto continues to lag, but I think we'll soon catch up. The big indicator that I'm watching now is the Dixie. And so that's basically just the dollar versus a bunch of other fiat currencies. Every time the Dixie goes into, let's call it a bear market, when it takes a nosedive down for 6 months to a year, crypto absolutely skyrockets. When it goes the other way, the Dixie does well. Crypto does very bad. It's called the dollar wrecking ball, and all assets typically do bad when the Dixie goes up. And it looks like we're at a stage where the Dixie is about to trend down to probably close to 90. If that happens, I think that's full banana zone, and that's kind of the main thing I'm watching right now. And I see no reason why it won't happen, especially considering the Fed has basically said last week that they are moving into a new regime. They're going to be cutting rates. And so I think everything that's going on right now in this summer is a lot of noise. There's not a lot of liquidity out there. And so we're so volatile. I mean, just was it yesterday when things collapsed out of nowhere and there was no news, but all of a sudden ETH was down 8% and Bitcoin's down 6%. And you're like, what happened? And you actually can't find any news. It's literally just illiquid markets when everyone's kind of off in the Hamptons right now, taking time off for the summer. And September should look a little bit better, but who knows? That's when everyone's kind of coming back, deciding where they want to invest their capital. But typically October and on should do very, very well. And we'll see what happens with the dollar. I think September we'll start to see this go down much more because we'll see rates go down at some point in September. So everything looks good. It's just we're in this very weird phase that honestly we've been in a bunch of times. If you guys remember last summer, the same thing happened. We had these summer lulls and it was very boring. And then all of a sudden October hit and we just took off. The same thing happened in 2020 when the bull run started. It was like these summer lulls. Even Michael Saylor came in and said he's buying all his Bitcoin. We pumped for a second and then we just sort of ranged and then we just dumped back down. And then like when I think it was October, maybe it was September at this point, hit, all of a sudden we just took off and the bull market just went nuts. So tends to happen this way a lot. And the longer that it gets this boring zone, the harder it is. But we just got to stay patient and just look at the bigger picture here. So that's really all I'm looking at in terms of markets. Martin, not sure if there's anything you want to add. I know you have this chart here to share as well, but feel free to jump in here.
Yeah, I like to looking at this chart, which basically shows how crypto, which is the orange line here, I believe, how it performs against stocks. And we can see different in the US indexes. It's S&P 500. It's like everyone knows S&P 500. It's 500 biggest US companies in this index. So it's represented by the blue color here. Yeah, here. And you can see that it's doing all-time high. And the same thing is for the NASDAQ, which is purple. And the interesting thing here is that the Russell, which is the index down below, RTY, is still not doing all-time highs. And the thing why I think this chart is interesting, that's what this chart tells us is basically the investors are still not willing to buy more risk on assets. You know, so they still prefer S&P or 500, but this index Russell, it represents 2,000 US companies. So obviously, you know, much lower, much smaller companies than those that are included in S&P. And this tells me like, okay, the investors are still not willing to accept more risks and they are still not buying like more riskier stocks. Then why should they buy crypto? So we are still not there. And I expect that we first need Bitcoin and Russell to hit all-time highs. And then maybe we will see more flows into other cryptocurrencies, basically.
You can actually kind of see the similar thing here where you see the delay in the huge pump here in the Russell back in 2020. It was like the later end of 2020 after the NASDAQ already had its big move, which was to here. And crypto did the same, kind of a delay. And then its big move came at the end of the year after the NASDAQ already did its big move. And same thing with Russell. crypto and the Russell are very risk on, and we're just not on risk on yet. We'll get there, but we're not there yet. We probably got to get past the election, I would say, or even before that, we got to get obviously rates down and kind of this everyone to believe that, hey, we're not going to go into this big recession, the world's not ending, and we're going into this new regime of money printing and rates down. And once that happens, people transition, and the Nasdaq will still go up, but not as much as it did. Like Nasdaq's move is early here, whereas the Russell's move is late, crypto's move is late. So I think we're basically looking at the exact same thing. Nasdaq's already having its big move, and the Russell crypto are kind of late. I don't see it any other way there. Any other charts here? That's all we got. Anything else you want to add, Martin, or you think we should jump into the questions?
Yeah, let's get into the questions.
All right, let's do it. Okay, so question here from Low Killer D11. In my point of view, we are witnessing a soft landing, but I'm still skeptical about it. We have been listening about a crash on commercial real estate for a long time, but it didn't materialize yet, if it ever will. Do you think it might still happen, dragging the smaller regional banks with it, or can we really have a soft landing? So soft landing, for those that don't know, is basically the idea of not having a recession and inflation coming down, not having a recession and getting rates lower. All the things that Fed Powell has been saying that everyone's been chirping him for. And the man is somehow probably going to do it. I know there's still a lot of people saying we're going to go into this bad recession and all this. I really don't see it. I don't think we will. So yeah, I think we are going to have a soft landing. There is definitely still commercial real estate that is a big issue. There's a lot of companies that have a lot of money in commercial real estate and they're not able to sell it or rent it out because just no one really has big offices downtown anymore, or a lot less do. And so that's going to be a problem. But I think that that'll just go on the Fed's balance sheet and we'll find a way to kind of save the banks or save commercial real estate, and the Fed will buy that up. So I'm not too concerned. Again, they can't let 2008 happen again. Just doesn't work. The reason for that is there's too many people that are retired right now that have pensions and rely on that to live. And if we let the markets crash like 2008, then the whole pension plan system breaks, which means the whole economy breaks. And there's just no way they're ever going to let that happen. So I just think if anything happens to commercial real estate, maybe they find new uses with it. And if they don't, and it collapses, they'll find a way to just put that into the balance sheet and they'll basically just print their way out of it. So it actually is not a concern to me at all. So that's it. And I think we're going to have a soft landing, which kind of wild to think, but I think they will. I know that you're not an oracle, but in the hypothetical event of a recession, what do you think will happen to the crypto market prices in the short, medium, and long term? If we had a recession, which I don't think we will, then short term on the recession news, we crash. NASDAQ maybe goes down 20% and crypto goes down probably a lot more, 30, 40%, maybe more, depending on how big the recession, quote unquote, is. And then I think from there, the way to solve a recession is to print money. And so I think Bitcoin and crypto bounce back, as do tech stocks and everything else. Just like every other recession we've ever had in history, it ends up being all fine. So I don't really worry too much. But again, I don't think we'll have a recession. I don't think we can really have a recession. So I'm not too concerned here. If we did, yeah, we would crash down. But I think when we thought we were having a recession, NASDAQ was already down 20%. And so if they in fact did say recession, like maybe we go down a couple more percent, like there wasn't much more room to go down. We had already kind of priced it in. Same with crypto. We went down so much. And so like, yeah, we might go down 40, but we're probably already down 30 at this point. So is it that big of a deal? Like generally it's not that bad. So I don't tend to worry too much about this stuff if you're invested over the long term. Martin, this one's for you. I'll let you, do you want to read it out or do you want me to read it out for you?
You can read it.
With all the guests in the show, I think they're talking about Milk Road, the Milk Road show here, saying, well, I'm not so sure about altcoin season and stocks outperform crypto anyways the last 6 months. Why do you think they're so much less bullish on altcoins than you are? If investing in the big seven and even gold is easier and safer and more profitable than trading crypto, then why would the greater audience enter the altcoin arena? There are no safe investment vehicles other than Bitcoin and ETH yet, and even that does not seem good enough, although inflows are increasing. Thoughts here around altcoin season, Martin?
Yeah. Well, I would say using last 6 months as a benchmark here is probably not enough. So if you look much longer to the history, Bitcoin is actually outperforming everything else on the planet. So I think this will be huge kind of pitch for all funds and institutions coming into crypto. And that's how actually big money are making moves. Like if there is an asset class which is outperforming, S&P and all other investment vehicles there available out there, they need to pay attention to it and they will want to have exposure. Unless because if not, they are risking like a lot. Imagine you are fund manager or like money manager, and you are still without exposure to crypto. But yes, crypto is still risky. It's still quite early, but it's much more risky today to not have any exposure into crypto at all. So I think this will drive huge inflows, not just in Bitcoin, but also in other, Ethereum, Solana, and maybe other great projects, because it just is way too risky to do not have exposure. And what were the other question?
Well, I was just going to add to it and just say, we're not, as we've said, we're not in the risk on environment yet. And so altcoins aren't meant to outperform yet. So yes, the least risky stuff is outperforming, just like Bitcoin is outperforming the rest of crypto. The Mag 7 is outperforming the Russell. We just showed that. But there are different times in a cycle where different asset classes or different assets outperform. And we're currently in the one where the Mag 7 is supposed to outperform and Bitcoin is supposed to outperform. And we'll get to a point where we go more risk on, and then those won't outperform, or they shouldn't. And if they do, okay, then everyone got it wrong. But just based on the cyclicality of things, we're about to go risk on, and that's when all these other things should outperform. And I think the other reason why you would, yes, it's easier and safer to just hold gold or the big 7 stocks, but the returns you get in crypto when we get to risk on are unlike anything you see in other assets. Like, I mean, Ethereum went up in 2020, 2021, like, I don't know, was it like a 10, 15, 20x over those 2 years? Like, I think it went down as low as 150 and it ended at 5,000 by the end of the year, or the end of the cycle. You don't get anything even remotely close to that in Mag 7 or gold or anything. And so, as Martin said, at some point these funds are going to have to put some exposure. They're not going to go all in on it, like probably many of us are here in this group chat right now, but they'll put some percent, because even if they put 1% or 2%, if it goes up at 20x, they're going to outperform every asset they hold, even if they have 40% of their assets in it, So it's just, the math makes sense that they're going to come in here when the timing is right. Let's jump over to the next one for you, Martin. You got more? Go for it.
Yeah, it's always about risk reward. So if you buy S&P or Nasdaq, they're different volatility, but obviously the upside is also limited. Even though like Nvidia this past few years is pretty crazy, but besides that, it's pretty normal, and there are like average returns you can expect. So is it something that's sexy and that's you want to invest in? Like maybe, but I would say it's quite boring, but sometimes investing should be boring. But for us who who are more passionate about the tech and we see crypto as a generational opportunity, that's something we want to hold, and why we believe that all the blockchains and everything's going on here in this space is gonna kind of disrupt whatever all the things we do today. So this different risk reward, I would say.
And look, you got the next question here is kind of right in line with what we're talking about. So the crypto market's overall capitalization fell in Q2 2024, underperforming compared to traditional assets like the S&P 500. Do you see this as a temporary setback, or could it indicate a more significant shift in investor sentiment? This is from White Rose. Thanks for asking the question. And I think it goes right along with what we're saying. Look, we think crypto is going to outperform the S&P 500 without a doubt in the long term, and actually, to be honest, in the medium term as well. And so, no, this doesn't change a thing for me in terms of my sentiment. I think people tend to follow and let prices guide their emotions toward an asset. I mean, even just right now, everyone hates on ETH at the moment because its price is underperformed. And so everyone's like, ETH is shit and ETH is the worst asset in the world and blah, blah, blah. And it's like, no, it's not. Nothing's changed. It's still a dominant player in the space. It still has the most developers, the most users across the ecosystem. It has everything. Nothing's changed from last year. If anything, it's much better than it was last year, and definitely much better than when it was priced at 5,000. The only thing that's changed is its price. And so all of a sudden people think and doubt it. Solana has done really well recently in its price, so everyone loves it again. Same with Bitcoin, right? Nvidia and the S&P 500 is doing better than crypto. So all of a sudden everyone's like, wait a minute, should I be in the S&P 500? And it's like, everyone just wants to chase gains. And it's not what you want to do. You want to look at what Martin said, the fundamentals. What's the future going to hold? And like, unless you think no one's going to go on chain, then probably you're better off investing in S&P 500. But if you think people are going to move on chain in the future, and we're going to go more and more on chain, then like this underperforming over the last quarter, it's just an opportunity more than anything. And I don't see it as anything different than that. Martin, this one's for you. Hi, team. Looking at the last few months, has anything changed in your analysis of the cycle in terms of cycle duration, narratives, which have headwinds versus tailwinds? Good question. Thank you, Suga M027.
This Saturday, we are releasing a report about 5 of our DeFi positions where we'll provide updates and what happened there, if our thesis still hold, and if we are still bullish or if we are selling some of our positions. So keep that in mind that you will get updates about some of our positions. But like more in general, I must say that I'm quite surprised how crypto is still underperforming everything else. But it feels like if someone thinking about Donald Trump talking about Bitcoin, Larry Fink from BlackRock talking about tokenization, and Visa, PayPal all launching on blockchains, it just feels so bullish for the whole industry, but it's just not seen in price yet. So I think the whole crypto is still kind of under the radar of the majority of people and market participants. But I feel like once the market starts to go up and we will see some green candles, then it brings more attention, more people, more investors, and it's gonna be quite crazy after that because the price is the best catalyst ever. So all the fundamentals and everything what's happening is just saying like, okay, blockchains are here to stay, and what's being built is awesome tech, and it's probably gonna, as I said, disrupt a lot of industries. So just the price doesn't reflect all the fundamentals and all the great things that are happening on the blockchain. So that's still kind of surprising to me. Like, you want to add something?
Yeah, I was just going to say, you got to remember that when crypto moves, it moves really, really fast. And so like we had a crazy movement in crypto in Q4 of 2023 and a little bit in Q1 of 2024. And it's basically nothing since. And at that time, everyone was so bullish. They thought super cycle or accelerated cycle, right? And now all of a sudden prices have kind of died down. And to me, it's like, this is exactly what we've said the entire time. The cycle takes multiple years for the cycle to play out. And in that time, there's a few weeks where prices go absolutely nuts to the upside. And then most of those few years, it's actually just sideways or down or chop. And we're in that right now, and everyone's kind of losing their minds. And I think the cycle is actually playing out exactly how every other cycle has, pretty close to. Yes, we hit all-time highs a little bit before the halving, blah, blah, blah. Like, who cares? It's a little bit different than it was. But like ultimately, it's all the same. We pull ourselves out of the bear market. We do really, really well. Then we chop along for a long time, and we have these very long pullbacks like we've always done in every cycle previous. And then we finish off strong at the end when we go risk on. And that lasts 6 months, 8 months. But in between all that craziness, it's a lot of boring chop. It happened in 2020, 2019. Like this happens every time. And so I don't know why people get so lost. Just look at past cycles. It's lining up perfectly. So I still think probably sometime mid to end 2025, we top out and we go into a bear market. Why? Nothing to do with crypto. Everything to do with the cycles of the business cycle, liquidity and rates and the dollar. And so I see no reason why anything is going to be different here. Now, narratives, they ask headwinds and tailwinds. Yes, those change all the time, just depending on, I don't know, what catches a bid. Like obviously you had the AI narrative for a bit there because NVIDIA was pumping. Now that it's pulled back, the crypto AI narrative has kind of slowed down. But I think everything is kind of doing exactly what it was meant to do. It's just hard when it's these chop, boring times. Everyone just gets so impatient and bored, I guess, and just like wants it to go up. Which I get. We all have so much of our money in this space, so we want to see it do well. But just look at past cycles. There wasn't that many days where number was go up. It's like number goes up, it goes up 20% in like 2 days, and then it just doesn't do anything for a while, and then it goes up 20% or 50% or 100% in a couple of days, then it doesn't do anything for a long time. And so the key is learning to just like manage these times where things don't do well, right? They just kind of chill, and you need to learn to chill as well. But otherwise, to me, cycle looks the same. If anything, cycle looks like it could be this long super cycle more than anything because crypto just continues, as Martin said, gets more and more bullish every day, right? We've got all the biggest companies starting to move on chain, and I just don't know how you could be bearish in a background like that. But ultimately for price, I think it's the business cycle that matters.
One last comment here. What has changed in the last few months? Me and Kyle, we always tend to buy and hold fundamentally strong assets, which is always a question like, will people really care about the fundamentals, or is it gonna be all driven just by hype and narratives and, marketing and YouTubers and those kind of stuff? In the last few months, I'm seeing more signs that more people and more funds are looking into the liquid markets and what's available there, because there are really great projects. I'm talking about Maker, Aave, Lido, those kind of stuff, because they are just businesses working, generating ton of money, and they are still super undervalued compared to the valuations from traditional finance like S&P. So these are the things that makes me more bullish on those projects with strong cash flows, strong teams, good brands, Lindy effects. So yeah, more bullish here.
Agreed. Although there will definitely be hype cycles, especially as we go risk on. A bunch of things without fundamentals will also do really well. That's just the way crypto and markets in general work.
But there is 14,000 tokens. So it's really hard to find the ones that are gonna perform exceptionally well. So, if you invest in fundamentally strong ones, you have like some ground basis for you like
buy and hold
to reason. Yes. Otherwise, if you buy
you
just
buy
some
and hold and not
shitcoin,
try to chase it.
yeah, and then that shitcoin is going down, like you will be always asking yourself, should I sell now or is it gonna up tomorrow? Like it's super hard. So
it's a stressful life. Yeah, it's a very stressful way to invest. All right, we'll move on to the next one. This is Shugam027 again. Many macro analysts are predicting rate cuts to continue late into 2025 and possibly into early 2026. Does that mean liquidity to continue until that period? We would possibly get a cycle top in late 2025, early 2026. So the one thing to remember here is there will be a point at which, so we will start to accelerate rate cuts, right? Like the first rate cut that comes in September in the US, that means we are accelerating in the form of rate cuts. Maybe it's 25, and then in October, November, December, we go 50 basis points, and then we go maybe 50 again or 75 or whatever, right? And maybe they get closer together, and each month we're like 25, like I don't know. At some point, as we get near the tail end of it, at the bottom, we'll maybe cut 25, and then we'll take like 6 months. And then we might cut 25 again, and then we'll take like 6 months or a couple months, or we just do nothing. So we're still in a rate cutting cycle technically, but we're decelerating at the rate that we are cutting, which means that we're starting to turn over in terms of quantitative easing or global liquidity. So you don't want to wait until all of a sudden we start to raise rates. You want to get out before any of that happens. As we start to decelerate the rate cutting cycle, that's when you want to start to be taking profits and pulling out. So like, we will continue to print money and lower rates probably into 2026 and even beyond that. But the amount that we will be printing will start to decelerate at some point, probably next year at some point. Maybe it's 2026. I don't know. That's when you want to be out. You don't want to be out until, or you don't want to be in it until the last time that we print and we start to go the opposite way. It's before that, right? So it's all about the rate of change, not the absolute number. Okay. So we are currently accelerating in the amount of liquidity coming into the system. At some point, we will start to decelerate the amount of liquidity going in the system, but in the actual numbers, there's still more net liquidity coming in the system. You want to get out as we start to decelerate, not as we start to lower the liquidity in the system, if that makes sense. It's all about rate of change. It's a hard thing for people to understand, but that's how you invest into the future. So when that happens, I have no idea. We'll have to keep checking and seeing what the Fed does, but that's the key, is looking at rate of change, not the actual net number. Is the September, Jay Hamilton, look at this. Jay Hamilton's getting on the questions. I love that. Is the September rate cut priced in? Which is the bigger catalyst, rate cuts or the US election?
Crypto will go up more than 100x in both users and value over the next decade. If you're listening to this right now, you're extremely early and have an incredible opportunity to capitalize. At Milk Road, our mission is to make you smarter about crypto. That's why we're doing today's podcast and why we send you a daily newsletter for free. But if you're ready to level up as an investor, then let me tell you about Milk Road Pro. We crafted this resource for investors who are already smart enough about crypto and are looking for more actionable insights on how to invest successfully in one of the fastest growing industries on earth. Every week, we break down the latest trends, dive into tokenomics of popular and up-and-coming tokens, and get into the nitty-gritty of market analysis, all to help you invest smarter. Plus, we have a private Discord community for pro members. It's like your backstage pass to the Milk Road crew, exclusive insights, hot tips, and live AMAs with our team. Now, if you're looking to level up as an investor, then click the link in the show notes below and sign up to Pro today. Don't let this bull market opportunity slip through your fingers.
That's a really good question. Probably it's priced in, but I don't know that the whole rate cut cycle is priced in yet. And so like, is a 25 basis point cut priced in? Like maybe, I don't know. It's so hard to say, but I don't think the idea of like what happens when a rate cut cycle starts and like what happens over the next year, that's definitely not priced in for sure. And then what's the bigger catalyst? Probably if Trump wins the election in terms of that day when the news breaks. I would say if Trump wins versus when we decide to finally cut 25 basis points, even though we all know it's coming, I would say if Trump wins, we're going to have just a God candle on that day and markets just absolutely rip for the next 24, 48 hours. Whereas like when we finally cut rates on September, whatever the date is, I don't know, probably markets react well, but I don't think it's going to be that big because I think everyone's already expecting it. So I don't know. That's my thoughts on that. Here's a great question, Martin. I think we can both answer this one. I thought this one was really nice. How do you make money in a bear market? So let's say you exit close to the top 12 months from now, approximately, and indicators point to a bear market for the next 6 to 12 months. In this scenario, what do? You might want to keep some of the majors and maybe earn yield, but what are the strategies to capitalize on the downward trend with or without leverage? So I love this question. And there's a few ways to think about this. Like, one, the easy thing is, well, generally in bear markets, there's yield. And so you might want to hold stable coins, grab some yield. Which ones at that point, I don't know. Maybe it's Athena, maybe it's Maker, maybe it's something else we don't know yet that doesn't exist yet. But like probably pretty easy when you're going to a bear market to grab 5 to 10% yield. Generally in a bear market means rates are higher. And so you have like real yield from treasuries. We obviously have real yield from proof of stake blockchains. So like there's definitely a chance to get yield. And I would say that's probably where most of your capital wants to be in a bear market. The other thing is like in investing, as long as you're investing long term, you're not always trying to make money. There are times in the market where you are really trying to make money. And there are times in the market where you're just trying to conserve and like save money. And so if we go into a bear market, the strategy shouldn't be start to try to short the market. That's the last thing you want to do in crypto. And you shouldn't be trying to take leverage to do all that stuff. Like in my opinion, unless you're a pro, which even in that case, no one's a pro at shorting crypto. It's insane. Because even in bear markets, you have 100%, you have a day where assets just go up like 50% for no reason. And so you get wrecked. So for me, it's like when I'm in a bear market, I'm not trying to make money. I'm just trying to hold onto my capital. I'm trying to earn my 5%, 6% yield, whatever I can get. And I'm actually just spending all my time doing two things. One, trying to make more revenue, trying to figure out how can I get more income so I can save more and allocate more capital during this bear market when I think we've bottomed out. And two, I'm researching, trying to figure out what are the best investments. Like if you invested back in 2020, everyone right now is tripping out about prices. But if you invested in 2020, you got ETH at $800. At 2022, sorry, you got ETH at $800, $900, $1,000. So you're up massively right now, even though it feels really bad. You bought Bitcoin at 16,000, 20,000 if you were investing in 2022. So these pullbacks we're in right now, it doesn't matter. You're already up a 3x in like a year and a half. That's insane. No one has that, right? And so the best thing, if you're trying to allocate now, like if you invested when we started our Milk Road Pro portfolio in May, okay, you're worried. We're down, I don't know, 12% or 13%. Like that sucks. I get it, right? But that time in the bear market, when you're trying to make money by shorting the market, don't even worry about it. Just research and find the right assets. What are the assets that are going to make it through this bear market? And start buying them when we're in the bear market. You're not going to make money that year, but whenever markets turn, you're going to make a shit ton of money really fast, right? If you bought Solana in 2022, or even you had the chance to do it early 2023 at $8, we put into our pro at the time to buy under $20. And we're currently sitting at 150 right now. Do you think that this pullback matters to anyone who bought it at under $20? Absolutely not. So in 2020, we weren't expecting to make money, but we were expecting to buy things that were discounted, that were cheap. And then we'll make our money in 2023, in 2024, and in 2025. So if the bear market comes in 2026, I'm not trying to make any money. I'm just trying to figure out where can I allocate my capital to make money over the next 3 years. Martin, not sure if there's anything else you want to add there.
No,
Are
well
you short in
said.
the market?
Never.
Thank you.
Never. Yeah.
You never short crypto.
Exactly. Yeah, like now we are playing offense, and quite like in 12 months we are gonna play defense. That's straightforward.
Okay,
Like,
here's a good question about stablecoins. This is from WizD star 007. For your non-major assets, you're betting on protocols that are related to stablecoins such as Maker, Aave, and Athena. But you said that in bull runs, it is best to hold coins and tokens instead of stablecoins. So why would such protocols explode in price when major coins are more popular? I'll just finish off some of this here. Also, in the peak of the bull market, don't you think that the narrative to get rich plays more vital role compared to fundamentals? Especially retail that came late. They want to get the slice of the pie and bet on risky assets with potential to get rich since major coins are too expensive at that time. So, Martin, why don't you answer the first one here of just like why would stablecoins do good in a bull market if we think that everyone should be 100% allocated to things that are not stablecoins? It's a good question.
I don't get it. Hold on.
So basically, our advice is don't hold stablecoins right now. It's be 100% allocated, and yet we're saying that stablecoins are going to do really well during a bull market. Why, if we're advising no one holds stablecoins right now?
I see. Yeah. Yeah, like it's another great chart we could actually share, but we didn't. And it's stablecoin total supply. Because if we expect that crypto is going up, we need more stablecoins. And because it will basically means that more people are flowing money into crypto. And that's what we want to see. Not just retail users, but also funds, family offices, and those kind of big players. So I know that some analysts and some people use stablecoin total market supply as a leading indicator for where we are at the cycle and when we will finally see some prices going up. But the point is, the more stablecoins on the blockchain, it's I'm lost here.
Let me help out here, I think. So just because we are 100% allocated, many others are not. There are many funds that have millions of dollars that they're investing, right? A lot of our audience is investing thousands, 10,000s, okay? And they hold their other money in fiat. But there are many funds that hold millions of dollars, billions of dollars in assets, and maybe they're putting 60% of their assets to work and another 40% are in stable coins, right? And as that 60% goes up because Solana triples in a month, they're taking profits all the time. And those profits are going back into stable coins. And also you got to remember the way that the ecosystem works of crypto on DEXs, for example. If ETH goes up by, 2x, most of the time it's ETH traded with a pair that's a stablecoin. So it's ETH and USDT or USDC. So the more valuable that ETH and all these assets get, the more stablecoins you need to balance out those pairs on DEXs. So for DeFi to work, if assets go up in price, you need more stablecoins to make the ecosystem still work. So, and what that means is if assets go up in price and stablecoins don't go up in their supply, then there's a lot of yield that you can get. And so people are going to eat up that yield, arbitrage it, and eventually that means that stablecoins are going to go up to get that yield. And eventually it balances out. It always reaches kind of an equilibrium. So long as asset prices go up, stablecoin supply will also go up. This is why you see stablecoin supply go up so much in bull markets. Generally, it actually can go down in bear markets, again, because the asset price has gone down. So there's that equilibrium always. So just because we are fully allocated doesn't mean everyone is fully allocated. And there's lots of plays to make money on stablecoins in bull markets, right? You don't always have to try to get your 100x or your 10x in assets. You can get it in stablecoins as well. There are many funds that have no problem doing that. So, and then I guess the other part of it is forget prices. Stablecoins are just getting adoption as payments. There are many people in this world that don't invest anything but are using stablecoins because that's just the only way that they can send money to their loved ones to another country or get paid by a company. And that is getting more and more adoption every single day. And so even if we forget about bull markets and bear markets, stablecoin adoption is happening at a very fast rate. And that's going to continue regardless. So there's lots of catalysts that are making the stablecoin market cap go up. And so that's why USDT, USDC, PYUSD is all growing. And same with things like Maker and Athena are all growing as well. And we think that trend continues, to be honest, probably in bull market and bear market. We'll see. But I just think it's reached escape velocity at this point. And I see no reason why that just doesn't go up and up for the next, 10 years at least. But we'll see what happens there.
Yeah, I got it.
Or you got more?
It's about use case also, as you said, like now PayPal on Solana is doing all-time highs pretty much every day. And it's not because people want to buy USD from PayPal and then go directly to buy some DeFi tokens or whatever. They might be just doing some transactions, just some payments or whatever. Or even like if those people want to buy, they still need first to buy stablecoins. And if there is more demand for stablecoins, then there is arbitrage. But those stablecoins already exist, even though those people will also end up fully allocated and having, I don't know, 100% of their money in Ethereum. They had to buy stablecoins or something to get into the market. So,
Right.
yeah, different use cases, but
Lots of utility.
yeah.
Okay, next one here from Low Killer D11. I know that Milk Road portfolio doesn't hold any Bitcoin because you are looking for the best returns you can have in this bull market. On the other hand, I hold around 40% of my portfolio in Bitcoin, and I don't intend to sell it on any occasion. However, in the back of my mind, I'm thinking of selling part of my Bitcoin near the market top if I can, and then buying it at lower prices when the bull market is over. Do you think this is a good strategy? Hey, it's a great strategy if you can do it, but trying to time the tops and bottoms of bull markets and bear markets is very, very difficult. And so good luck, I'd say. I would say this. I think the best strategy is just think about why are you selling the Bitcoin? Do you need that Bitcoin or do you need that money, that value to buy something like a down payment on a home or a car or I don't know, pay off a loan or something? Like if you need that, then just sell it somewhere near the top. Just as it's going up, once you have enough, sell it for sure and pay off that loan. Don't try to just ride this thing to Valhalla because like you're going to have volatility. So like pay off your loans. Buy your house that you need to, like do whatever it is that you need to do and use that. Now, should you sell a bunch of it and try to time the market? Like if you're good and if you know what you're doing and you're paying attention, maybe you do it with a certain percent. Would I do all of it? Absolutely not. And I won't even do that myself, even though I feel pretty confident that I can somewhat get near the top and somewhat get near the bottom. I don't think I can time it to the top and I don't think I can time it at the bottom. But I'm pretty sure I can time it somewhere where it's overvalued and probably buy it somewhere where it's undervalued. But it would be very difficult. And so I would say it's up to you on your risk tolerance. Like there's a chance that you mess that up. A lot of professionals have even messed that up. And so for me, I usually take profits when I need it for something else, right? Like as crypto goes up, I want to have a safety net of assets that I hold that are in stable coins that just generate yield all the time, bull or bear market, just there for a rainy day fund. And so like, I'm going to take profits just because I want that. It makes my life feel more secure. I'm going to buy a car with some of my profits this cycle. Now, am I going to sell that at the very peak top to buy that car? 100% I'm not. But I'm going to sell it when I feel like I've got enough and I can buy that car, right? So it just kind of depends on your lifestyle and what you need the money for more than anything. But just remember, it's freaking difficult to time the tops and time the bottoms of cycles. Very, very difficult. Kyle. This one's directed, I guess, right at me by Martin8292. How did you time the market exit in 2021 for the altcoins? Were you successful and which parameters did you use? What made your portfolio explode? The bull run of known coins were a very early buy-in on unknown coin that we now know very well. Great question. I did not time the market exit in 2021 well at all. This is what I say. It's very, very, very freaking difficult to time it. I did a terrible job. I think a lot of people did a bad job last cycle. I was also my first cycle, so I didn't know enough about it. I feel more confident this time, but I think more than anything, when you're in the know, you know that you'll never be able to do it. At the time, I thought I would be able to do it. Now I'm smarter in the sense that I know I can't. So I didn't time it well. But what did happen, what I did do well is I got in really early. So I bought back in 2019, early 2020, and was already buying for when the COVID crash happened. So I was getting Bitcoin at 3,000 and ETH at $150 or whatever it was, right? So very, very cheap. And so even though I didn't sell the top, it didn't matter. I was up so much on my ETH that it wasn't a big deal. On my Bitcoin, I was up so much that it didn't actually matter. Now I still bought on the way up. So I bought Bitcoin at 3,000, at 5, at 10, at 20. I think I stopped buying Bitcoin around 30,000 was the last buy I did. So some of those buys I was down on in the bear market, but most of it I was up on because when you're buying Bitcoin at 3,000, pretty easy to buy a bunch, which is great. So the best thing is buying during the bear market. That was the thing I did the best. And then in terms of altcoins, I mean, it was a crazy, crazy, crazy time. No one knew what the heck was going on back then. There was no fundamentals like what Martin talks about now. So everything was just a hype cycled guess. The only things that I did well, I wrote a lot of things down fully to like 99% down. What I did do well is I sold on the way up multiple times. So Aave was actually my first ever, interesting that we just bought it now, my first ever altcoin that I bought was Aave, and it like did a 3x within a few weeks of me buying it. So I sold like half of it, and then it did another like 2 or 3x, and so I sold a little bit again, and then did like another whatever x, and then I rode the rest down to zero, or not to zero, but the rest down a lot. And I did that with a bunch of them. So I didn't have a good strategy. I just was like, holy shit, these things are going up like 2x, 3x. This is wild. And I just was smart enough to take a bit of profits on those. But most of them, I thought they were going to go to a bajillion and rode them down. So I don't think I did very well at all on the marketing exit. I just bought early enough that all my mistakes didn't matter. I was still up. And that's why I am so big on kind of long-term investing and trying to understand the bigger cycles, because most of us here are not pro traders, right? I'm not. I'm in crypto every single day, and I still don't think I can beat the market if I try to trade. But if I just play the cycles, I know that I can do pretty well. And so I try to put myself in a position where I feel confident I can succeed, and I'm not just guessing and trying to like hope for the best. So alt, same thing. When the alt season comes, just make sure you're taking profits and look at the bigger cycle. As the cycle starts to turn over in terms of liquidity and rates, everything I talked about earlier, you want to get out. Even if your alt hasn't done its 100x like you hoped, just get out. Even if it's only done 50%, that's it. It's not a big gain. You could have got more if you got an ETH or SOL. Don't care. Don't sit there holding it. The amount of people that are like, I'm still holding XRP and DOT and ADA and whatever from last cycle, and it's down this much. I want to wait for it to go up 75% so that it reaches the amount that I bought it at. That's craziness. Just get out of that thing. It just makes no sense. So don't focus on the prices of these assets. Just focus on the cycle and sell it when the cycle is going to turn over at some point around when the cycle is going to turn over. But the price and the amount it went up does not matter, because it's never going to be what you think it is. That's the best advice I can say. Martin, European question. How would you recommend selling crypto in Europe to avoid paying taxes on profits taken? My banks started to reject all my transactions. Wow. This is from Lukey Man. Thank you.
I guess it's different in every country. But for example, in Czech Republic, there are communities where you can basically sell your crypto P2P. So there is a crypto chat or some Telegram group where you can try to connect with people, and sometimes those people want to buy, sometimes they want to sell. So that's the only way I can think of how to, buy or sell crypto if you cannot use your bank.
Do you have ETFs?
No.
In Europe? There's no ETH or Bitcoin ETFs in Europe?
Not I know of, no. Well, maybe in London. I'm not sure though.
Right. I guess it would depend on your brokerage, whatever.
Yeah, but I guess if someone wants to sell crypto here, you're suggesting to buy ETF?
So the way that I get around, so first of all, you can't really get around paying taxes. Like if you made money, you got to pay tax on it. It's just how the world works. Good luck trying to get around that. You can obviously do peer-to-peer, as Martin said. Mine is like I bought a bunch of the ETH and the Bitcoin ETFs early on, and I did it in an what's called an RSP in Canada, which is like TFSA, tax-free savings account. And so I can sell those ETFs and I pay zero taxes on it whenever I want. Now I can only buy ETH or Bitcoin. I don't have options to buy, whatever token, but that is the one way that I've set up early on in the cycle so that I knew that I could take some profits without having to pay taxes. The rest, I'm just planning I got to pay taxes on. So I don't know in Europe which ETFs you would have access to or what tax-free savings account you would have access to, but I'm sure they exist in some regard.
That's actually funny that we are always looking for ETF approvals, but who cares about European ones? Like we are
What's
all
going
just
on over there? I'm sure you guys have to have some.
Yeah, there must be some. Yeah.
Well, your markets are smaller. Okay. Thinking about liquidating a small amount of gains from my portfolio to buy land. 1, is this smart or do you suggest waiting? I have a diversified portfolio of mostly DeFi coins. 2, what is the best way to do this without paying cap gains tax? We just answered the cap gains, so I won't do that there. Martin, this one's for you, I guess. Do you want to...
Actually, there is an answer for the second question as well. Like if you can use Maker to put your collateral or your crypto and take loan, and then it's basically tax free. So you can buy land.
We have someone who works with us that did this. He used his ETH in Maker to take out a loan. He got enough DAI that he bought a down payment on an apartment in Mexico, and that's how he bought his place. And he never had to sell his ETH as a result. Now he did this last cycle, and so obviously the bear market was a scary time for him. But he never got liquidated. He still got his place, and it was all good. So you can definitely do that. I recommend if you're going to do that, you do it early in the cycle, or you do it with a hell of a lot of collateral. Doing it later in the cycle is tough because you know the price of these assets are going to go down, and so there's a good chance you're going to get liquidated. But you can definitely do that. You pay no taxes if you just put your ETH in Maker, take that DAI, and then go buy whatever you want with it. It is a great way to do it as well. And then the question around buying land, I mean, that depends on where you live. I have no idea where you live. I just bought a home in Canada, and I did that because rates are about to go down. And because rates have been high so long, everyone is putting their house for sale. So the market just tanked over the last 4 months. The house that I bought, I was able to talk them down over $100,000 on the price because there was literally just no buyers. And thankfully for me, not for them, but they were in a divorce. They had to get rid of the house. And so it lowballed the shit out of them and they had no choice. So like, just like you want to buy crypto cheap and you want to sell it when it's high, when rates are high, that's generally the best time to buy a home, to buy land, especially if you don't need a mortgage or you don't need much of a mortgage. I put down a pretty large deposit on my home. So I got the house for pretty cheap. Obviously rates are higher right now, but if you grab a variable and you think rates are going to go down, then it can be very smart. So that was at least my strategy. So again, I don't know where you're buying land. Canada has a lot of immigration and not a lot of houses. So like the real estate market here just continues to go up. It's a secular trend. So like I think Canada is a good place to be buying land. I have no idea where you live, so I can't say. But if the location is good, it's a waterfront, it's always a good time to buy land for sure. And if you can buy it with your ETH and Maker, then even better.
Yeah, but be aware, it's still quite risky, and be aware of your loan to value. But like, is it a good way to sell right now and buy a land? I think even though it seems that maybe the price of that land you might want to buy is quite low and it's expected to grow, it's still expected to grow much less than crypto. So
100%.
like, if you still hold and do not sell crypto for the next 12 months, there's a high chance that crypto will do, I don't know, let's say 3x. But the land prices might rise as well, but like how much? 10%?
But nowhere near as much. It again depends. Like, do you need a home to live in? Because like if you're paying rent and you want to switch that into paying a mortgage, it's probably just better anyway. Or do you need to diversify? You own too much crypto that it's like, okay, I need to diversify. Even though I think crypto is going to go up more, I still need to diversify a little bit. Then it's not a bad idea. So it depends on what's going on in your life. But 100% crypto will go up more than real estate, without a doubt. Question regarding the pro portfolio. Any other projects that research team is keeping a keen eye on to add to the portfolio, and any that might be on the borderline to be dropped out? Good question. Also would love to know the ETA on the report where pro team is staking their assets. That one's coming. Martin, I'll let you take this one. Anything on your eye?
Yeah, something we keep talking about is DePIN. It seems like now is quite a good time to learn more about DePIN and do some updated research about the projects that are currently in that market, as well as there's a lot of layer 1, gen 2 kind of blockchains, which are like Sui, Aptos, Monad, Berachain, and those kind of new blockchains, which could be potentially, Ethereum killer or Solana killers. So we still do not have quite strong opinion here, but we want to learn more. But at the moment, we still do not have enough knowledge about those. So that's something we want to learn more. And about the staking our assets, we are going to have report about where we stake our assets, like where do we have our ETH and Sol with our updated Milk Road portfolio. We call it version 2, where we will provide all yielding strategies we use for our assets, basically. So it's coming up in 3 weeks, I guess.
Yeah, in a few weeks, you guys will have, right now you see our portfolio, we can see all of our assets and our allocation and everything. Soon we'll have another page on that in that portfolio as well, where you can see where we put those assets to work, what kind of yield you can expect, what are the risks, etc. So we'll have that coming soon, and then we'll have a pro report that goes along with that helps you understand how to do it, how to think about it, etc. So we'll have lots of stuff on yield coming up in September. Let's call it that. When exactly, we're not sure, but it's coming in the next couple weeks for sure. So you'll get that. And then anything that you would get out of the portfolio, Martin, they asked. Anything that you might drop out?
I I think we are quite happy with our portfolio, though you will see that there are some unlocks for some tokens in our portfolio in few months. So we definitely have that in mind, and we will keep looking at these dates. And if we see some, good returns, and with these unlocks upcoming, maybe we are gonna sell, but like nothing in the short term. We are still like pretty bullish on our portfolio. We provide this Saturday our updated thesis for some of them. So yeah. Would you add something?
I think one thing to remember is everything in our portfolio is invested for the cycle. None of them are short term. We did have one. I think we had DGen in there, which was more of a short term. We flagged it as, and obviously markets got wrecked. So meme coins got wrecked. So we sold it. Thankfully, I think it's down a lot since we sold it. It was already. I mean, we were down 50% on our investment when we sold it, and it's down. I don't even know, way more than that now. But that was our only short term investment. Everything else we're playing for the cycle. So yes, a bunch of our assets are down. Everything is down in crypto, so it doesn't bother us. Nothing we would want to sell. We think all this can catch a bid when the banana zone, the altcoin season comes back. And so really not gauging selling anything right now, because we got to wait and see what happens when the banana zone comes back, right? When the altcoin season hits, if there's anything that's not working for a reason, something happens fundamentally to them, we might sell. But otherwise, right now, everything looks great. And if anything, every week we've got a ton of updates on all of our tokens. I mean, look at Maker. It's completely it's not even called Maker anymore. It's called Sky. So lots is happening in the assets that we've got fundamentally. And we just continue to follow that. And we think over the next year and a half, they're going to do really well. At least we hope. By the way, one question I just want to answer that I know there's a few questions in here. People are like, would you buy more of Aave? Would you buy more Maker? Should I hold more ETH? Should I hold more Sol? And there's one blanket answer for all this is just look at our portfolio, right? If you see that we hold more of our portfolio in Maker than Aave, it means we're more bullish on Maker. And the answer to that question is we'd hold more Maker because we do hold more Maker, right? If you look at ETH and Sol, or if you look at anything in our portfolio, just look at the allocation percentage, and that is the answer to which one we are more bullish on, right? Someone's like, should I buy everything in Maker and just only hold Maker? Well, it's 3% of our portfolio, whereas, we have other assets, the majors, that are much, much greater, 40, 50%. So obviously, we don't think you should hold 100% of your assets in Maker. We only hold like 3%. It's so tiny, right? So just look at the allocations in our portfolio, and that'll guide you on how bullish we are. What is our risk thoughts around these? Like, it'll tell you what how we are holding it, right? So you don't need to ask us which one we would prefer. You can just see it right in the allocation. So make sure you use that. It'll make your life a lot easier. And then you don't need to ask us those questions, because we're just going to answer exactly what's in that portfolio. That's why it's there. So make sure you guys use that. Check it out. I think that's it. We got to wrap up. We are at the end here. Everyone, thanks so much for joining. Hopefully this was useful. I know we didn't get to everyone's questions. I'm sorry. There's a bunch more that we didn't get to answer. It's hard to get all these in 1 hour. So we'll do this again next month. We'll see you all here, and we'll hopefully get to a bunch of your questions. Maybe, just maybe, by next month, we will be out of the boring zone. And I bet you a lot of our questions will be a lot more bullish than they are right now. But we'll see. Maybe it's 1 more month after that. But either way, things look great. We're excited to be investing in crypto, and we think it's a good time to be allocating. So we hope you guys are too. Anyway, we'll keep in touch, and we'll see you guys in the next AMA. Thanks everyone for joining. It was great to have you.
Thank you guys. See you. Bye.
Wow, what an incredible AMA we just got access to. I hope you guys all enjoyed that. If you liked this episode, please, please, please help us out. Share it. Hit subscribe, hit follow, give us a comment. Let us know what you want to hear more from us. Anything you can do will help us out. Now, this episode was just a sneak peek into the exclusive benefits for the Milk Road Pro members. If you have questions about crypto or want to know which projects to follow, you're going to want to upgrade to Pro and gain access to our expert research team who will help you navigate the market with confidence. Remember, nothing we say is financial advice. Crypto is risky. Investing in any asset is risky, and you should never invest more than you can afford to lose. Thank you for listening in, friends, and we'll see you in the next one.